This video is for educational purposes only and should not be considered financial advice. How to trade the Strat with ICT Concepts. Outline, intro, key ICT concepts, trading process, examples, and recap. Intro. If you've watched our previous videos, you will see how easy it is to use this new trading system called the Strat. In this video, we will be combining the Strat with ICT concepts to show you how you can achieve amazing results. Key ICT concepts. The key ICT concepts we will be using are mitigation blocks, fair value gaps, and liquidity. Trading process. To trade these two concepts together, you need to have one as the dominant concept and the other as the subordinate. This approach will help you avoid confusion between the systems. We will use ICT as the dominant trading system and the Strat as a way to enter the market. Trading process. Reversal patterns, fair value gaps, and mitigation blocks occur at the outside of the range. Continuation patterns, reversal patterns, mitigation blocks, and fair value gaps occur in the middle of the range. That's where you'll see most of the action and the variety of patterns. Examples. Let's look at how we can use reversal patterns at the outsides of the broadening formation. Additionally, we will examine how to use continuation patterns in the middle of the range. Here's a weekly chart of GBP USD. We can definitely see a broadening formation happening right here on this weekly chart. And as we've stated before, we usually like to look for 3 swing highs or swing lows to check for a reversal. Here we have a swing high, and a swing high. And there you draw your trend line for your broadening formation. And we see price has reacted from here. And we also see a 2 up, 2 down pattern from the Strat. If we look down here at this side of the broadening formation, we can see swing low, and swing low, which caused price to go to the upside. On the daily chart, we can see that same broadening formation and how price reacted from the top of this trend line. Again, looking at the Rob Smith Strat patterns, we see a 2 up, 2 down pattern. And then down here at the outside of the broadening formation, we see a 2 down, 2 up pattern. If we're looking for ICT patterns, we can look and see how this fair value gap got filled in. And this one is in the process of being filled in. This other one right here is still open. And it may be that price is moving down here to take this liquidity and fill in this fair value gap. But we see how price reacted from this broadening formation with a 2 up, 2 down Strat pattern. And this is what confuses a lot of ICT traders, because they think that this is an order block that should be respected. But price will most likely plow through this order block to get down to the top of this order block. And as we see down here, this order block did not prevent price from going down. And that's where the Strat pattern is very helpful with ICT traders. On a daily chart, we can see all of this playing out. Remember, the middle of the range is where you want to pay attention. That's where price is going to make a decision of which direction it's going to head. Also, the outsides of the range, the broadening formation, you will see where price makes a decision. Right here, we have a 2 up, a 1, which is consolidation, then a 2 down pattern. Once price reversed back in, that gave you an opportunity to go to the downside. And the reason why you don't want to enter right after price cleared this level 1 consolidation is because we have a mitigation block. We have a low, high, and a lower low. Price dips right into that mitigation block, reverses, and then it moves down. And you want to be into your trade around here. And that's where you'll get your move to the downside to get to this order block or this order block. And we see price dip right back into it. Or if you want to look for this fair value gap, price moves right back into this fair value gap and then reverses. Now let's look at a 4-hour time frame so we can see more trades. But you see all of this price action that happens at the outsides of the broadening formation, and then all of the consolidation happening on the inside of this broadening formation. So here on this 4-hour chart, we drew out the middle of the broadening formation, this 50% level. And we see how price moved down with a vengeance to this side of the broadening formation, creating a lot of fair value gaps. Now, because of that, we know that price is either going to go through these fair value gaps quickly, or it's going to create a lot of structure. And as we see, that's what's happening here. A lot of structure is created. But once you see that structure is created, it gives price an opportunity to plow through all of this structure very quickly. And that's what happens right here. And we'll get to that in a minute. So we see a break of structure happen right here. Price moves to the downside after that break of structure. And this is where ICT traders will get hurt, because ICT traders are going to look for an optimal trade entry. Or they would look for this small fair value gap right here as a place to enter. And that's where you have this candle go all the way past all of that, takes out this fair value gap, and then goes past 50%. And this right here goes down to 79%. So that's where you have to understand the broadening formation. We have one swing high, another swing high, and then this swing high. And it broadens out. And once you get that third swing high, you know that price is going to come back and form another broadening formation to the downside. And we get that here. So it's not drawn out, but if you see 1, 2, and 3, that is the broadening formation, 1, 2, 3, and 1, 2, 3. Then price reverses. And also, if you're looking at mitigation blocks, this is a low, a high, and a lower low. And once price breaks that structure, it should respect this mitigation block. But that's where, again, ICT traders get hammered. You have to respect the broadening formation. A third level was not created for that broadening formation. So once that's created, now when you have a break of structure, which occurs right here, break of structure, we have a swing high. This price move broke it, came right back down. Now you can use optimal trade entry. And you only have 1 and 2 of your broadening formation. You don't have the 3. Once you get the third, which is up here, that's when price moves back down. But this is a smaller move compared to the larger move going on here. So we have to take out this side of the broadening formation. So price is going to continue to move up until this side is taken out. And that's when that occurs. But within this move, you're going to have broadening formations on a smaller time frame. As you see, broadening formation to the upside, broadening formation to the downside, broadening formation to the upside, broadening formation to the downside. It all follows the same pattern, and then it reverses. Now let's look that we have a mitigation block here. We have a 3, 1, and then a 2, then a 1, 2 down, 2 up. This is the Strat pattern. Then a 3, 2 pattern to the upside, and then a 2, 1, 2 pattern to the downside at the top of this broadening formation. And if we look and see, this mitigation block is what made that 3, 2 pattern happen. We also have a second mitigation block that this pattern responded to. And then you can see how this is an order block up here. If we look on a larger time frame, we can see that this is a low, high, and a lower low. So this order block right here is where price respects the top of this candle and then moves to the upside. that occurs here. Now I'm going to introduce something to you that we're going to talk about in other videos, which is PMG, or pivot machine gun. Rob Smith talked about these types of movements where price creates a lot of pivots to the downside. And basically pivots are just higher lows where traders will be putting their stop loss. And that's where you want to look for a big price run, which happens here. This big price run is what Rob Smith calls a pivot machine gun, but ICT calls it a low resistance liquidity run because there's not a lot of resistance. Price can just plow right through it. And as we see here, there's a lot of price action that has been mitigated, which makes it low resistance. And Rob Smith calls that as well the pivot machine gun. So this is a pivot machine gun to the downside. This is a pivot machine gun to the upside. And we have a mitigation block, a high, low, and a higher high, which is where price stopped and reversed. And then now, after those pivot machine gun moves to the downside and to the upside, we can see how price just plows right through this fair value gap and even cuts through this mitigation block. You would think price would stop here, but it goes right past it and moves down to this bottom of the broadening formation. And this mitigation block, as well as this one, got disrespected. Price clears all of that and then goes all the way down to hit this liquidity down here. So even though we really rely on mitigation blocks, you have to understand them in context. Yes, this mitigation block worked here. Yes, this mitigation block worked here, as we see price reversed. Yes, a bunch of these other mitigation blocks worked, but these two did not. And why? Because they're in the middle of the range. Once you get to the outsides of the range, that's when you want to start paying attention to your mitigation blocks. To recap, the Strat is an awesome trading system to add to your arsenal of trading. And when you combine it with ICT's concepts, you will get amazing results. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more trading tips and strategies. Don't forget to hit the notification bell so you never miss an update. Until next time, happy trading.